Today, let's dive into a massive stablecoin catalyst and, of course, get into some of the news that broke over the weekend. We've got a special guest also joining us. Let's just jump right in. Before we get started, though, I do want to thank our sponsor, and that is Tangem. And we're going to be talking to WalletConnect today. And when you think about WalletConnect, I want you to think also about self-custody. And the way you can get into self-custody is jump over to Tangem's website and get started. If you're brand new to crypto, should be on your checklist to get going. Very easy to set up, one of the most secure ways to really store digital assets out there. No bank or exchange stands between you and your funds. Very easy to activate, and I can attest to that in terms of setup. It is seedless by design, so that is another feature that really benefits Tangem users. So make sure and use our link down below. They've got a lot happening in terms of discounts and some cool stuff around the big football event. So check out the code down below. It does help you guys get started. I want to bring in Jess Houlgrave, who is the CEO of WalletConnect, and dive in a little bit. How are you, Jess?
Hi, Paul. I'm very good. Thank you for having me today.
We got a chance to report on the MasterCard news last week. Obviously, WalletConnect has been in the news around integration with Ingenico and so on. And for those of you who may not know, Ingenico is a big POS company that works with retailers around the world. First of all, give us kind of an understanding of what that rollout process would look like. When could we use, WalletConnect at a retail POS near you?
So WalletConnect has been around since 2018, and we provide this very core infrastructure for the crypto and stablecoin industry. One of those applications is on-chain payments, and that means that the payment end-to-end stays on-chain. We can off-ramp at the back end if a partner wants that. But unlike most of the crypto solutions, the crypto cards that are out there, this is a pure on-chain payment. Ingenico, for people who don't know, have about 40 million merchants globally. They range from petrol stations to luxury goods to hospitality environments and kind of everything in between. And we've been working with them really to refine the user experience around paying with crypto. So we have our first stores going live in Europe this summer, really as to test those experiences and make sure that they are working well. And then we'll be rolling that out globally with Ingenico and their acquiring partners after that.
All right, I'm looking at a tweet you guys put out, stablecoins part of the day. You guys are using WalletConnect right there with your SafePal wallet. And then, of course, Ingenico as the POS, which is the little handheld devices that a lot of times come out to the tables when people are ordering food, or maybe you're doing it at all sorts of retail environments in general. What about the expansion beyond Ingenico? You've got Verifone, obviously, and then Pax also in this game, which would pretty much give you guys maximum coverage in terms of retail. Any plans for expanding with those guys?
Yeah, look, I think the point of sale payments landscape is really rapidly evolving, especially in Europe, but also around the world, to accommodate other payment methods that aren't just cards. And that's historically been what's really dominated that space. So in Europe, there's many manufacturers now. You're highlighting a couple here. There's SumUp. There's a lot of them, and often they sort of target different spaces in the market. So some are really brilliant for, when you don't have a checkout person there, when you're doing that remotely at a gas station, for example. Some are designed specifically for restaurants. They've got all this other software built on them. Our goal with WalletConnect Pay as a product that we build is that this should be really easy for anyone, whether they're the software producer, the hardware manufacturer, to incorporate this as a payment method. The great thing about it is it doesn't require somebody to understand very much about crypto. There's nothing in terms of like knowing the chain, knowing the asset, needing to train people in store on what a crypto payment is. You don't have any of that. Because this works with every wallet on the WalletConnect network, it's about 700 wallets globally, it means that regardless of what wallet that person uses, what asset they have, and what chain they're operating on, they'll be able to make that payment without the people in store needing to learn about crypto.
All right, so the way I understand it, it's a QR code that gets integrated into the point of sale, is that right? So just like anybody's QR code that you use with almost anything out there, So let me ask you this, because we cover the point of sale sector pretty heavily because we think payments are going to be so huge in crypto. One of the areas that we've been tracking here in the US is around a company by the name of Toast. Most companies who go through, POS companies like that, they have to integrate through these things that are APIs. And with Toast, what we have found is it's almost impossible to get in and correlate. Toast being one of the big companies out there that have kind of spearheaded the iPad version of point of sales being used at most of the US retailers. Are you telling me that API requirements aren't necessary for you to be able to integrate into payments?
So we basically offer a holistic backend system, and the way that can be integrated is in multiple different ways. So we have SDKs that can plug into existing software, APKs that can be put on Android devices. People can integrate in a headless way or with APIs. We're working increasingly on soft POS, i.e. these methods of accepting payments in store that sit on a mobile phone or an iPad, so you can do that today. We're really agnostic because we see that this space is going to continue to change very dramatically. And I think our core focus, and you mentioned the QR code a moment ago, that is a very familiar form factor for payments in some parts of the world, but not in all. So if you go to Southeast Asia, you're going to see a QR code almost everywhere with every local payment method to be making a payment. Yeah. But in Europe, certainly in the US, we've become incredibly comfortable and confident with tapping our phone or with tapping a card at the point of sale. And so one of the things that we're working on in a major way is around tap to pay, to make sure that user experience is familiar for the end user. All of these things also come up with in these very regulated environments as well. And so everything that we do is with thought to regulation, to compliance, both in terms of like the hardware, making sure that that's compliant and that we're working with the right partners there, but also just the end-to-end payment flow. The payments company doesn't need to worry about that in terms of the risk and compliance burden.
I see. So big news over the weekend, Tether is getting delisted in the EU. This, of course, is all in reference to what's been going on with the MiCA regulations that are implementing almost as we speak. So Jess, how would that affect what you guys are dealing with regulatory compliance around stablecoin usage of something like Tether in the EU specifically? You mentioned a little bit about that. Can you explain?
Yeah, so as a platform, we're chain agnostic and asset agnostic. So that means that the payments partners that we work with can select the array of assets and chains that they want to accept payments on. In this case, we haven't quite seen the effects of this yet, but we've had a couple conversations with partners today. My expectation is that our payments partners in Europe may elect to not accept USDT as a payment method. Now, of course, there are things that we can do from a consumer perspective in terms of on-chain swaps and things like that abstract some of that and may still enable users to use USDT, even if the recipient, i.e. the payments company, which is the regulated entity, never touches USDT. All of that is stuff that we're going to have to work through. And I think that what we are seeing, though, is massive change in Europe around euro-denominated stablecoins. And so although we are at this moment where USDT specifically is not going to be able to be used in Europe, we are seeing this huge growth in euro-denominated stablecoins. And I think that's actually going to be the biggest catalyst for a change in terms of the assets that people pay with here. Because if you live in Europe, you're getting paid in euros, you think in euros, you're buying goods and services that are denominated in euros. Actually, I think that those euro-denominated coins, or maybe more specific local currencies, Swiss francs, Swedish krona, things like this, are actually going to be the biggest driver for change in terms of assets this year.
Obviously, this is all happening right now on July 1st, so we're literally going into this. At the same time, Circle has secured full compliance, which is USDC. So when you think about that, just in your opinion, do you think this will be basically a landslide for Circle and for USDC usage, and we'll start to see more implementation of that? Or back to your point, you're saying that maybe it's the European stablecoins that could win this battle. How do you think that plays out?
Tether is still the predominant stablecoin that's in use, particularly across the Middle East, across Asia. And so, whilst that's going to have an effect locally in Europe, I don't think that it's going to be a massive driver globally for the downfall of USDT. I think we're certainly going to see uptick in terms of euro-denominated stablecoins and other local stablecoins, but Tether USDT still is that predominant coin that we see as an asset being used in Asia, in Middle East, and I think Tether is probably, knowing how innovative they are, going to start thinking about other things to do as well.
Okay. I was not aware of this, that only 196 projects out there, crypto companies, that were basically got licensed out of the 3,000 companies that were registered in the EU. So this is pretty aggressive. Do you think this is going to enable more innovation for the EU, or do you think this really gets into a much more regulatory, almost defense mechanisms of allowing innovation to make it into the EU because of these compliant requirements?
I think when I look at MiCA, I think it's certainly not perfect. Rarely does everybody agree that a piece of regulation is perfect. What it has done, though, over the last few years is give some clarity to companies. And, ultimately, most companies want to be compliant if they need to be. They want to have very clear guidelines about what they do and don't need to do. That's, I think, been one of the reasons that Europe has been actually quite attractive for crypto companies over the last little while. Ultimately, there was a huge long tail of companies that's been established over the last 10 years in jurisdictions all around the world which don't meet compliance requirements. And we will see those companies, this purge that text or that tweet just mentioned. But actually, I think that Europe continues to be very attractive. Specifically, there are some countries in Europe that are doing a lot to attract new business, new crypto companies to come there. We see the expansion of big US companies into Europe, like Circle, really pushing over here. So I think Europe is going to continue to be very attractive for crypto companies.
So you mentioned that you're working right now toward providing maybe a solution where Tether could still be used in a scenario where it's not compliant, but maybe the retailer doesn't even know that Tether is being used. It's being settled over in a European stablecoin or a USDC. How close are you for that to actually become reality? Are you there now in terms of WalletConnect?
I think we're going to have to see. So with WalletConnect, we're not regulated. We just provide technology to our partners to facilitate these types of transactions. Today, in most self-custodial wallets, there is swap functionality that runs through DeFi, i.e. it isn't going through a regulated exchange. It's happening purely on-chain. So the ability to combine that type of technology as part of a payments flow is something that we're able to facilitate. So we can enable a DeFi-based swap and then a regular payment settlement as part of one transaction. Obviously, that's going to be up to our partners to decide whether or not they can get themselves and their regulators comfortable with that. We spend a lot of time with partners and with regulators around the world trying to help them to understand this, especially when it comes to self-custody wallets, which obviously behave slightly differently than many others, but still form the predominant part of our network. So I think we'll have to see. The technology is there. It's just whether we can use it in this use case that still needs to be determined.
So what is the business model for WalletConnect? How do you guys make money? Are there fees attached to these? What's the process for you guys to take a cut here?
So at the core of WalletConnect, we have this open source network that is free for people to join. And that's what hosts our 700 plus different wallets and our 80,000 plus applications that sit on that network. That's really important because it means that that network is somewhere everyone can be, whether you're a small application or a large application. You can get the benefit of that very wide wallet ecosystem, and that's a service that we're providing really to our wallets and to the ecosystem more broadly. On top of that network, we build specific products for specific use cases. And so WalletConnect Pay is one of those very specific products. It's an acceptance product aimed at payments companies to help them accept crypto payments. That's a product that we charge for. Similarly to some of our other products, we have toolkits that developers can use. We have a series and a suite of products that are commercial that we build on top of that network.
Okay. So can you share where the fees start and how those are integrated, or is it a wide array depending on the application?
Can be very, very wide. So some of our products look like a SaaS model. They just have a monthly subscription. The one tier starts at $79 a month, for example, if you're just building that. If you're at the other end of the spectrum and we're building end-to-end compliant stablecoin payment flows with you. These are highly customized solutions. Okay. They're taking in a lot of different components. That's priced very differently, sometimes with transaction fees and things like that included in them. So really varies depending on the products that we're talking about. But our goal with payments specifically is to make sure that this can be cheaper than most of the payment methods that are out there today. I think it's really, really important. There are still thousands, hundreds, millions of merchants around there who are operating on very thin margins, and they're paying 2, 3, sometimes 5 or 8% for a cross-border payment, which really, really impacts their bottom line. So as we came into this space to actually build more specific payments products, a big part of our goal there was to lower the cost of payments for merchants and take that 2 or 3% for a payment down somewhere to 20, 30, 40, 50 basis points, depending on the flows and everything that's needed, but to make it very meaningfully cheaper for the merchants that want to use this as an option.
Jess, how does this affect the merchant fees themselves? You're talking about cross-border fees right here, but here in the US, well, really around the world, you have merchant fees that mostly the major credit card companies extract from any transactions that go through their network. If you're circumventing that through a WalletConnect payment via a QR code and it's integrated into point of sale like Ingenico, or we see more advancements coming, would that give a retailer the ability to maybe reduce their fees overall, or do you think there's going to be a scenario where some fees are going to be extracted still?
No, that's the goal with WalletConnect Pay is that because it's fully on chain, we can really compress that pricing, and we don't need a Visa or a MasterCard to be part of that flow. The transaction effectively will work with any wallet on our network, depending on things like off-ramp, some of the compliance processes. There's variable costs that sit in that, but that's really that like 50, 60 basis points that we can get for a single transaction to accommodate all of the partners in the flow, including, for example, the wallets. It's going to bring that cost for the merchant drastically down from where it is today.
Yeah, and I think for some of our viewers and listeners, I mean, in some cases, you've got deals that are sweetheart deals of major retailers like a Walmart or maybe a Starbucks, where they get under, 100 basis, under 1 point. But most retailers are in the 2 to 3 range in terms of what they pay for merchant services. So this would be significantly cheaper when you consider almost 100% of their sales are now going through some sort of electronic payment right now, whether it's a debit or credit. Very little cash is being used, which reminds me, what about tap to pay? That's very highly used here in the United States. I even find myself now trying to find places that use tap to pay more often because there's still a handful of places that don't have tap to pay. But what about tap to pay for you guys?
Yeah, it's funny, most of the time I leave my home in Europe now, I only ever take my mobile phone with me. I don't even take a card because tap is so predominant here. And I think for us, this is about meeting the consumer where they are. And what I mean by that is consumers around the world are used to different payment forms. Some are used to a QR code, others, like me, and now very used to just tapping my phone in order to make that payment. And I think it's really important when we talk about change for consumers that there's a really low barrier for them to get started. This isn't about for them learning to go through a new process or do something that's unfamiliar. This has to be really, really easy for them, because otherwise we're going to start to see drop off. People are going to try and do something. It's not going to work for them. They're not going to like that. That's even worse for the retailer, because that transaction may never go through at all. So closing that gap, and I talk often about this chasm between the Web 2 payments experience, which we've all come to find very delightful and easy, and the crypto payments experience, which today is still not there. There are still problems. We're much better as an industry than we were 2 or 3 years ago, but there's still a lot of solutions out there in the market where the person behind the counter needs to ask what chain the other person wants to pay with. All of these scenarios that add a lot of friction. So our efforts to build things like tap to pay, better QR, making sure that all of the selection points happen in the wallet rather than on the device, making sure things are compliant. Every single thing we're doing there is about creating better user experiences, which leads to higher conversion, better retention.
What about privacy? Anybody that's using cash, that's the ultimate privacy token out there, if you want to call it that. But if I look over on how it works with you guys, there is a bit of data that is collected, I guess, but it's mainly for the transaction. Is that right? Where it's going to the next person?
Yeah, so this example here is a payments that's set up under European travel rule regulation. Okay. And everywhere in the world has some variation of what type of information needs to be collected as part of a transaction. That might vary. If the transaction is lower than a certain amount in some countries, you don't need to collect any information. If the transaction is, over $1,000 in a jurisdiction, maybe they want these 3 or 4 pieces of information to be collected in order to make that payment compliant. So our solution enables the regulated party, i.e. the payments company that is processing this transaction, to collect that information from the end user. Again, in a very secure way. It's going through encrypted channels, etc. And that is purely being used for compliance purposes to make sure that that payment is legitimate and compliant. Privacy more broadly on blockchains, we know, is very challenging because blockchains themselves, or most of the blockchains out there, don't support native privacy. You can look up a transaction on chain. There are design elements in our system that help to keep the user's information and the merchant's on-chain information private. But we're also seeing a lot of developments in the industry in this space. Increasingly, there are privacy chains, privacy solutions that are out there that will be an important part of how crypto payments scale.
I think that's going to be one of the critical things that crypto is going to have to get right for scale, is getting into the layer of privacy. Speaking of regulation that could correlate to this, at least here in the United States, the Clarity Act is now on the verge of either getting through or getting stalled. We don't know just yet, but there are some things that are critical right now. Eleanor is reporting here that it looks like it's logistically impossible. Remember, guys, this has to only go through the Senate. And if you look at the dates on this right now, we've got a little bit of time still left before we go into that July 4th target zone, which is what is being looked at. The color coding there, just so you know, both chambers in session on yellow, Senate only in session in blue, and then the House only. So you've got a few days here, end of June, that still would give us a window. Reason I say that, Jess, how would this affect you guys? How would this affect WalletConnect if Clarity goes through or doesn't go through?
So I think the biggest thing that we're seeing here is clarity, literally, for our partners. Whether that's a payments company, a tokenized equity company, the banks that we work with, all of them are really looking for clarity. They're looking to understand the stablecoins, the assets, chains, everything that they can use in order to build these solutions. And many of these institutions have been looking at this space for a very long time. Genius Act obviously provided a huge catalyst for people to take some of those plans off of the shelves and put them into practice. And Clarity will ultimately do the same. I think there's enormous hope across the industry that this is going to get there in the next couple of weeks, because ultimately that's going to allow everybody to keep innovating with great confidence and ultimately deliver the benefits of this technology, like lower cost payments, faster settlement, or anything else to the people that need it.
Do you have an odds bet on this one? Are you leaning more positively on the side of it's going through, or are you more skeptical?
I'm not a betting woman, but I'm going to say I certainly have the optimist in me thinks it's likely that we get there.
All right, there you go. All right, well, Jess, we're going to go to our lightning round with you just to get some insights on where you think some of this could be going. My first one is kind of a dystopian idea, and that is, what if WalletConnect failed for a full week? What would that look like for the entire crypto market? Would it collapse, do you think? Or do you think, I mean, you guys are in everything I know of that I'm out there on crypto with.
We certainly touch an awful lot of the market. Last year, we moved about $400 billion across institutional and retail use cases. So I think it would be pretty bad. Would it entirely collapse? Hopefully not. But certainly something we work to make sure isn't going to be the case.
Yeah, I think it would be pretty bad too. So I'm with you on that one. WalletConnect login is more user-friendly than the login with Google or even with PayPal buttons.
I'm going to agree there, and I'm going to agree because we work with the wallet that you already use. You don't need to go setting up new things. We are native in the applications that you already choose.
It's lightning fast too, and I like the fact that it doesn't go through a lot of requirements, two-factor authentication, because you've already done that obviously with the blockchain. So that's much more efficient. Less than 0.5% fee transactions between merchants, customers, and dApps will never happen. You mentioned, though, that you said it would be around 50 basis points. So you're saying that that's where the fees would probably land, or no?
Definitely false. We're going to get it lower than that for sure over time.
Lower than that. Okay, very nice. Good to hear. Stablecoins ultimately a threat to credit cards and debit cards, just cards in general. What do you think?
You know, I sit on the fence there. I think certainly the card companies are having to evolve a lot and change their own business models and the technologies that they are using. But these are very smart organizations. And ultimately, I think it's a great sign that they're leaning so heavily into this space.
Have you seen the growth on crypto cards over the past 6 months? It seems like it is literally a bell curve straight up. And these are not credit cards. In most cases, they're like a debit card, but they give you access to your full wallet funds. And now they're coming up with all sorts of very innovative ways for you to actually almost have a pseudo credit element tied to this. Do you think that will force the banks to kind of come up with more creative ways to use cards like this?
The numbers on stablecoin cards are the ultimate indicator that end users want to hold and spend crypto. And that is fantastic. What they don't deliver today is any benefits for those merchants in terms of settlement times and fees. So that's where I think ultimately this is an intermediary measure where over the longer run, as more of the value chain, as more of the stack moves on chain, we can keep the entire payment on chain, get those fees down, get that settlement faster. But the numbers that we see against those cards are great confidence for anybody building in this space.
Yeah, I'm surprised we haven't seen major advancements from both Circle, Tether, Paxos, PayPal, you name it, all the stablecoin companies out there to really incentivize the retailers to try to do something with these, more efficiently. And this would be one of the gateways, obviously, with what you guys are doing. So interesting. Merchants will never be able to out-incentivize, speaking of that, out-incentivize credit card rewards for users. They'd rather pocket the extra too.
I think false there. And I say that because actually user incentives are really, really important and something that we're working closely on with a bunch of partners. You can imagine a world, Paul, where you go to buy your coffee and you get an offer in your wallet that says pay with coin X on chain Y, get an extra 3% cash back. These are really meaningful when it comes to consumer behavior, and they're definitely top of mind for people working in this space at the moment.
Hey, listen, I would do it. I'd go that route if I could see those kind of cashback rewards, especially if it gets competitive with something like Amazon, who's been kind of the king of cashback and rewards when it comes to a credit card. WalletConnect growth is more tied to self-custody growth than it is to stablecoin growth. Do you agree?
I disagree there. The main reason, because the WalletConnect network is pretty agnostic to what type of custody you use. We have a lot of custodians on the network. We have a lot more banks and neobanks joining the network. These are entities that are issuing stablecoin wallets to their end users. They want to provide that same functionality, letting them pay. So really not about the key management, but about the fact that they're holding stablecoins.
Interesting. Okay. WalletConnect should launch their own point of sale.
We will not be moving into the hardware space anytime soon.
I don't blame you. That is a mess. I would say absolutely not. It is an absolute mess. I totally agree with that one. WalletConnect became an industry standard before a clear monetization model was established for WCT. Can you explain a little bit more about WCT?
Yeah, WCT is our native token for the WalletConnect network. This is used for governance. It's used for incentives. We just talked about cashback, actually. And if people are paying with WalletConnect Pay, they can earn WCT as cashback. We were an industry standard from 2018 when we first started. And the token gives us a lot of value. It gives us a lot of the ability to try new things, to create new incentive models. But the core of the WalletConnect network is, as it always has been, free for people to use. And that's really where the value sits. So for me, WCT is great. The fact that the industry standard was there before the full monetization model was there is definitely not a problem. And we continue to see a lot of opportunity to use the token to help drive incentives.
Let's go into this one right here. WalletConnect's addressable market is capped at humans, but what about Agentic?
We certainly do. We actually have a WalletConnect Agentic SDK that allows an agent to use your own crypto wallet. One of the big issues today for agentic payments using stablecoins is you've either got to give your private key to an agent, which is pretty risky, or you have to set them up with their own wallet. So then you're going to have 25 different agents with 25 different pockets of stablecoins. With the WalletConnect Agentic SDK, which is compatible with things like UCP and 402, they can use your existing wallet. You can delegate some of those permissions, but you don't need to start moving funds around or sharing private keys.
That'll be nice. How long before that's going to be available? You say it's available now or coming soon?
It's available now. You can build with it.
Awesome. Okay. Last one right here. How long until you think log into Netflix or Walmart, Xbox using WalletConnect? What do you think? Not in my lifetime.
I hope these two things are mutually exclusive because you've got a time limit there.
Is what my crew is telling me there. Paul's, he's like, I see what you guys are doing.
I guess for this, I'm going to be optimistic. I'm going to say maybe less than 3 years.
Jeez, I'm hoping that it's less than 3 years now. That's for sure. Listen, Jess, this has been fun. Thank you so much for coming in today. We've learned a lot more about what's happening in the wallet space and really kind of the connection, I think, that starts to bridge the gap of crypto and regular people, because this is something that a lot of people are going to be using, whether they know it or not, in the next few years. So thanks for coming in today. We appreciate it.
Thank you for having me.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.